Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over individual stocks versus exchange traded funds. What should you buy? Now, we're going to be taking a look at my portfolio over on M1 Finance. I saw a video recently, I researched it a little bit here, and I wanted to kind of go over my performance because I have been investing over on M1 Finance in the individual account following ticker symbol VOO, which tracks the S&P 500, but I also have a Roth IRA, which has 33 single stocks inside of it, and it just sort of performs on its own. So I wanted to do what is the 1 year performance between the S&P 500 ticker symbol VOO, which is inside the taxable account, the individual account, and my Roth IRA, which holds 33 holdings for the past year. So if you are brand new to the channel, hit that subscribe button below. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments yourself, drop it into the comment section. I always read and reply to all your comments. Let's go ahead and get into the video. So I was kind of researching on this and kind of thought back, you know what? I have actually been investing since back in January and February 2018. I have at least 1 year of data to go over. So I thought this would be kind of an interesting video to showcase. So here I do have the individual accounts here. I'm going to be going just over the 1 year performance of the individual account, which is the taxable account, and the Roth IRA. Now the individual account for the 1 year performance, which only holds VOO, is up 7.76%. Now if we look at the S&P 500 1 year performance, if we look at that, it is up 2.05%. The Dow Jones is up 2.09, and the Nasdaq is down for the year 1.04. So you may be saying, what the heck? Why is your portfolio showing 1 year up 7.6%? Isn't it only supposed to be 2.05? Well, if I were not adding any equity at all on lows, my unit cost would have stayed the same. I would have added any more equity at lows, and yes, my portfolio performance would roughly be sitting around 2.05. But what has been happening in this portfolio? Well, I funded this account with $100 back on December 7th, 2018, $100 going in. That has been my only investment. Now, I have had referrals from viewers, subscribers, friends, family members, coworkers who have showed the M1 Finance platform to. Referral in the comment section below. And they have really liked the platform. They've signed up, and I begin to get referrals. Both them and I have got referrals for signing up, either $20 or $10 or $25, just depending on the referral and the time bonus that M1 Finance offers. So in the past year, I was able to average in using referrals into the market. So every week or every month, I would have some referrals coming in. And over that time frame, this portfolio grew and averaged into the market all during the downturn of 2018. If we look at ticker symbol VOO and we look at the detail here for the past year, let's just say 3 years. Now in 2018 in January, we were at all-time highs. And what happened in February? We fell 10%. We corrected down 10%. We corrected an additional 20% by December 24th. And then we had a huge market rally. Well, guess what was taking place between January and December? I was getting referrals. I was averaging into the market, taking advantage of that dip and adding more equity in. And when the market recovers and you've been adding equity in at those lows, lowering your unit cost, well, when the stock market recovers, your equity that you've added at lows compounds on itself in the returns of the market, and you actually end up with a much higher return than if you had just invested $100 and just left it in there. If I had just left $100 in this account, I would have a return roughly of around 2.05. We can actually test this by going and sharing this pie. What this is going to do is create a copy of this one, and I can go ahead, I'm going to go ahead and paste it here, and it's going to load up here for us. And this is actually going to show us, without any influence of equity, this portfolio was created back on June 5th with $100. It's never had any additional equity added into the portfolio, and it sort of tracked the 1 year performance of the S&P 500 index. We can see here it fell all the way down to $85.05 there on December 24th, and then we had a huge market rally. So we had no equity influence in this, and we can see here that the 1-year performance is now showing 1.89%. That is much closer to that 1-year performance of the index of 2.05. Now, ticker symbol VU does not follow the S&P 500 index percent for percent or dollar for dollar. This just has holdings in it, which tracks very similar to the index, but doesn't always get it 100%. Plus, you have that expense ratio here of 0.03. So with that taken into consideration, let's also go look at the individual stocks. Now, again, we jump over to the Roth IRA. Recently, we've had a huge market rally here on Tuesday, June 4th. And we can see here, if you watch my Monday or Tuesday video where I went over my 1-month performance for May, I was down in market gains, down some $50. And one single day, I went from being down $50 to being up $601. So the stock market is very volatile out there. Here, we're looking at a 1-year performance there of 10.42%. Again, we were only at a 7% return for the past year with the individual count, which has been averaging into the market on those lows. This is showing a 10.42%. That, again, is because I took advantage of those dips. When the stock market was falling in 2018, I was constantly adding equity here. You can see here, for the most part, I was pretty slow between January and August. That is because I was building up my real estate business. I was kind of doing a lot of that in the background. Now, when the markets really started to tank around October, September, that is when I really began to throw in chunks of equity into the portfolio. And you can see that we grew this portfolio very quickly here, taking advantage of all these dips. And by December 24th, I had roughly double the portfolio equity from 55 to now nearly 10,000. Now we've continued to average and add equity into the markets on lows, on those dips that we've recently had here. And overall, for the 1 year currently, as of June 4th, we're up 10.42% in comparison to the individual count. Let's go ahead and jump back to the individual count, which is up 7.76. Now, what happens if I don't include the equity here that I've added? What if I just look at it the same way that I looked at the individual count? I click over here and I share my pie. I go ahead and copy this. I jump to another window and I go ahead and paste that in there. Now, what is the 1 year performance of the Roth IRA? So the Roth IRA here is up 5.49% without any equity being influenced in the specific portfolio. So this is just adding $100 into the account, not touching it for 1 year. If I had not touched it in 1 year, you know what? I'm going to go ahead and do these side by side. I'm going to jump over to the individual. I'm going to go ahead and share this pie, copy this, open up a new window, paste that in there, and then put these. There we go. So I have the individual count, 1 year, 1.89. 1 year for the Roth up 5.49. So a much different number there, nearly 1.89 to 5.49. So a little over 4% there difference from not adding any new equity. Now, that is the 1 year performance between the individual count, which just, if you had just added $100, followed the S&P 500, never added any more equity into the account, you would be sitting roughly at a 1.89% increase. If you had taken the Roth IRA with all my holdings based on my target percentages, put in $100, you would be sitting at $105.49. Now, this doesn't really, you always want to add more equity. What's the point of just pouring water into a bucket and just letting it sit there? It's not going to do anything. It's not going to create a stream. You want to get multiple buckets, throw it in, and watch the stream build. So here, we're at $101.89 of equity here after 1 year. And on this portfolio, we're showing $105.49 of equity if there was no equity involved in these returns. So over the 3 year here, all right, we won't go over that. We just wanted to kind of showcase the 1 year performance there. This is the 5 year. Let's see if it actually loads up. 38.17%. Now, the way that these returns are kind of calculated here within the M1 Finance performance calculations, M1 Finance does not take rebalancing or reinvesting of dividends in the performance. So when I look at the individual account, this has a yield of 1.78 with an expense ratio of 0.03. The dividends in this account, with an average of 1.89% return, which portfolio do you believe would have higher dividends get paid out into the account and then being able to be reinvested? That would probably be the Roth IRA here with an average yield of 3.5%. So that is basically all I wanted to kind of cover in today's video, was just kind of going over single stocks versus exchange traded funds. I 100% believe brand new investors should begin their investing journey within exchange traded funds, because this helps get them emotionally ready for those red days, and those red days will take place. You would just have to stomach the redness. You won't have to sell. What you really need to do during the red is just buy into the market, buy at those lows, take advantage of the dips, take advantage of the value out of the market, and when the market does recover, if you follow the indexes, it generally does, or always does. It has always returned and recovered 100% of the time. You'll just be better off because you bought at these lows. And when you do get that equity return, or the market does recover, because you lowered your unit cost, you'll just be higher off overall than the market. Now, 1 year there, individual account up 1.89, the Roth IRA 5.49, and the index here up 2.05, 2.09, and NASDAQ down 1.04. So that is it for today's video. I just wanted to do a quick comparison for the 1 year performance if I had invested in an exchange traded fund or in my single stock allocations. The single stock allocations won off this time, but let's do it again. I'm going to try and remember this back next year. We're going to look at the 1 year performance between, again, the individual account and the Roth IRA single stock allocations, and we'll kind of do a comparison then as well. So that is it for today's video. If you guys did enjoy this video, hit that thumbs up. I thought it was an interesting idea. If you guys are also investing in exchange traded funds and individual stocks, compare those portfolios, compare the performance. Has your single stocks performance outperformed your exchange traded funds performance? Let me know in that comment section below. And of course, if you have not yet subscribed, definitely hit that subscribe button below. I really do appreciate all the new subscribers, all those new comments that I've been receiving. I really appreciate the feedback. That is it for today's video. I will see you guys next time. Have a great day. Bye.